Hello everyone, good to see you. Okay, let me put everything in place, hold on. Okay, I will enable the chat. Okay, welcome to my another live stream today. So it's the 7th of July 2020 on Tuesday. So I hope you're having a great day today also, and welcome to my another live stream today. So every day I do the lives, and you see the whole schedule on my website when you come to my website. And if you click on this YouTube, and there is a live schedule tab here. And this is where you can see the whole list of my future lives here. So here is the program guide on this live stream. So today is the 7th of July, and I will talk about forecast lines. And forecast lines very powerful. If you start to understand the essence of Ichimoku, you can draw the forecast lines, and you can actually look at the market based on the forecast lines, whether this is bearish, bullish, or horizontal range. So this is another type of the strategy or the tools that you can use whenever you look at Ichimoku, and whenever you want to take trades with Ichimoku also. So let's get started right now. If you like today's topic already, please press a good button, and make sure to subscribe and click the bell button so that you get notified as I do these lives every day. And if not, if there's any personal reasons and I cannot do the live, I will upload a video instead so that you can learn at least on my recorded videos also. Okay, so thank you for joining everyone. I can see your comments now. Alright, good to see you. Alright, good to see you. Okay, so the forecast line. Forecast line is actually, it's introduced actually on this one of these Ichimoku original books too. But this is to capture how the retracement is forming, and whether the retracement is going to be reversal, or it's going to be a fake reversal, or it's going to be in the range. So for example, this is the Euro JPY daily chart, and after you see this pin bar or doji candle right here, the price has been going down now. So before it was moving up, but now this is going down, and this is retracing backwards, as you can see. So the question is whether the price will go upwards from here or go downwards from here, or becomes horizontal. Which one of these directions the price is going to be the big question to ask yourself. And to forecast how the market will be moving in the future, you can use the technique called the forecast lines. And forecast line is not really here yet. It's not here yet. This is something that you have to create by your own. So if you are using the MT5, MT4 trading view, then you must be seeing the drawing tool like this line tool. So you can use this line tool to draw the forecast line. So how you can do is that simply, this is not really difficult. This is so easy that you can do. But let's say in this case, you see the recent high here on this candle. So, sorry, you see the recent high here, and after this recent high, the market has been retracing backwards. And so when you see this pin bar, or when you see the recent high like this, then you take this candle and you count 26 candles forward. And 26 candles forward, what you can see is that the Kumo forming at that time. Okay, because Kumo is shifted 26 candles forwarded. So when you see this pin bar, and when you start to count the 26 candles in the future from this candle, then you know exactly how the Kumo was forming at that time. Is it clear so far? So 26 candles forward is actually in this vertical line here. Okay, it says 26 bars. So this is exactly where the Kumo was forming at that time. So let me just put the vertical line here, like this. Oops, right here. Okay, so make sure that this is 26 candles forwarded. From this top, you just count the candlesticks, and this is exactly on 26 bars, right? So now you know the Kumo at that time, at the time of when the candlestick, this pin bar was forming. And if you put the vertical line like this, then you can capture the Senko span A and Senko span B. Remember, when it's up Kumo, Senko span B is the lower part, Senko span B is the lower part, and Senko span A is the upper part. So you get the price value of Senko span A and Senko span B at that time, and you simply connect these dots. So let me just create the lines. So first, from the tip of the wick pointing upwards to Senko span A, and also another one from the tip of the wick to Senko span B. Okay, and these blue lines are called forecast lines. And what you can capture by these lines is that the, for example, after the market started to retrace backwards, the price has been below these forecast lines. So that shows the market has been bearish, okay, bearish trend. And gradually, the candlesticks were moving up, and the price were actually between these forecast lines. So this is when there is no trend. The market was equilibrium at this time. And when you really see the price breaking these forecast lines upwards, which is happening right now, we can know that this is starting bullish. So these are the forecast lines that you can draw, and by looking at the current price to these forecast lines, you know exactly how the market, how the equilibrium is at the moment, and you can expect how the market will be moving in the future. Of course, there's no 100% guarantee, but you can expect which way the market will be moving from there. So this is what we call forecast lines, and here is how you can draw it. So I don't think there's any automated program that actually helps you draw these lines. So basically, you can draw these manually, but this is not so difficult. You just take the recent high, and you just count the candlesticks 26 forward, and you put the vertical line, and simply you draw these two lines from the top to Senko span A and B, and you get these forecast lines. So currently, the price is above the forecast lines, as you can see. And if the price, so if we have to wait for a couple of candles now until the price, until the time reaches on this vertical line. So I think there will be another 2 or 3 candles. There will be another 4 candles, another 4 candles in the future. So within in the next 4 trading days, the market will reach on this day. And if you happen to see the price at that time was above the Kumo and above the forecast line, then that means that you can expect that the market will go upwards afterwards. Again, not 100%, but this is something that you can refer to. And if the price lands within these forecast lines, so for example, from here, let's say the market start to go down and lands anywhere between the Senko span AB within the Kumo, then you can expect that the market might be in the range in the future. And if it happens to be below these forecast lines, then the market will continue to go downwards this way. So this is very simple, but this is very effective whenever you want to see if this retracement is going to persist or not by using this forecast line. And so this forecast line, I recommend you to use them. Use this one on a daily chart first, because I found on the daily chart it's more effective. And as you get used to it, you can take 4-hour chart or 1-hour chart to draw these forecast lines. But first, start with the daily chart until you get confident on this concept. Okay. So this is a great example how you can draw the forecast line. So for example, if you go in the back, there was another retracement happening on this day. Exactly from this candle, the price started to go upwards. Price started to go upwards and retrace backwards. Before it was downtrend. And after that it went upwards. So from here, you also were able to create the forecast lines. So once again, from this candlestick, the lowest low candle, you count the candlestick 26 forward. That will be exactly here. 26 forward will be exactly on this candle. Okay, so I put the vertical line here. I put the vertical line so that I know where the Kumo was at that time. And I draw the line from the bottom to Senko span B, and also another one to Senko span A. And in this case, the price has been all the way up here, right? The price is all the way up here, exactly on this candle. So we can expect that the market will keep going upwards this way. And after the Kumo breakout, it was a very strong uptrend. So we already know that this was the uptrend, and we can also expect that the market will continue to go up from this candle. And now the price is retracing, and now it's going up. And also there is another forecast lines like this. And now that the price is breaking the forecast line now, so we can expect that the market will keep going upwards, especially when the price sits above this Senko span A. Most likely it will go up. I mean, of course, there might be some retracement or some volatility afterwards, but eventually we can expect that the price will go up from there. So this is a basic way to draw these forecast lines. And I recommend you to do this in daily chart first. Okay, I think this is pretty clear. So yeah, it's if you use this in smaller time frames, then it might not gonna work so much, because usually the smaller time frames are more volatile, and you might be seeing more fakes. Especially in Ichimoku, you will see many fakes in smaller time frames. So yeah, I would recommend you to take daily first, and if you get used to it, then you can go down to 1 hour, 4-hour chart, or even you can use it on the weekly chart too. And this is essentially why the Kumo is here, right? Kumo shifted 26 forward because we know that this is the equilibrium. I mean, Senko span B is the equilibrium in the long term in Ichimoku. And if the price reaches to Senko span B for the next 26 candles after the market hits here, market hit the highest price, and if the price start to retrace backwards, and if the price hits this Senko span B before this date of the yellow vertical line, then that will be bearish. That will become bearish. But if the price remains above the Senko span B, then that means overall this is too bullish. So yeah, so that's why Kumo or Senko span B is shifted forward, and Senko span A is also shifted forward to be supportive information of Senko span B. Like when the price start to go into the Kumo, then we have to be careful, because the price might be reaching all the way to Senko span B, and eventually it might break downwards anywhere. So to capture where the equilibrium is in the long term, the Kumo is created this way. Yeah, originally the Kumo, Goichi Hosoda didn't call it as a Kumo, right? He called it just as a resistance zone. But yeah, eventually some traders started to call it Kumo, and it makes sense to me. But yeah, this is essentially why the Kumo shifted forwarded, because yeah, so that we know where the equilibrium is in the long term in the future. And by taking that concept, you can use these forecast lines to foresee, to expect the next market move potentially. This method is brand new. Never heard of this before. Okay. Yeah, all is introduced on this Ichimoku original book here. So yeah, I run the yeah, so this is, I think this is new, because I don't see this information in English anywhere. So yeah, I run the Ichimoku community, and I talk about these forecast lines in more examples. So if you're interested, please join. This is a monthly subscription, and if you happen to see the join button on YouTube, that's where you can join. And if you want to see more details, you can click on the link below, and you can come to my website, and you can see all the details about this Ichimoku community here. But yeah, this is a basic. So let's take a look at other pairs. So yeah, let's see which one we can, on which a market we can see the forecast lines. Oh yeah, so this is another forecast line that I created on this GBPJPY earlier. The highest price was here, and if you count the candles from here, 26 forward will be here, exactly, will be here. So I put the vertical line again like this. Let me just delete this one because it might be confusing. Okay, so, and I put these forecast lines like this. So now the price is going down after it was the bullish N wave. Now it's reversing. So the question is whether this is going to be the reverse N wave or not. Whether this is going to be the reverse N wave, continuous downtrend, or it might become a V wave, or it might continue to go up is a question, which way the price is going to go. So forecast line can help a lot to capture that. The price is now going up, but the price is still below these forecast lines. So at this rate, maybe the price will be in the range, and eventually on this day, 11th of July, the price might be below the forecast line. I mean the forecast line and also below this Senko span B here. So when you see that, you can expect that the price will go down. And if the price will be within these forecast lines, it might be in the range for some more days. And if it breaks upwards and sits above these forecast lines, then it might continue to go up. So that will be a great way to capture the overall market direction. And this is why Kumo is here. That's why Kumo shifted 26 forwarded. I mean, this is one of the reasons why Kumo shifted forwarded, to create these forecast lines. Yeah, so if you are a swing trader, you can just follow that direction and take trades. But if you are more intraday or day trader, or more between day to swing myself, then you have to look at the smaller time frames to capture trading edges. So yeah, here is this was another example on this GBPJPY. So you can take a look at your whatever pairs you're looking at, and if you happen to see these recent high or recent low like this, then you can create a forecast line and see how the price will be moving afterwards. Okay, so yeah, just as a part of disclaimer, all this knowledge is based on my own experience. So when you take trades, please do with your own risk. Then we should be fine. So let's see what else I can find. Let's see if I can find any other examples to create these forecast lines. So here too, you can create a forecast line. But yeah, let me try to find another good example. So yeah, here there is another retracement happening in the market. So this is the USDCAD daily chart. It's the USDCAD daily chart, and now after you see this pin bar right here, the price is retracing backwards now. Okay, so in this case, you take this pin bar and you count the candles 26 forward simply, and you get that date. Okay, this is going to be July 13th will be here. So I put the vertical line here. Hold on, was it here? Let's see. Yeah, it was here. Okay, so then you draw these two lines, to Senko span B and Senko span A, and you keep watching the market. And now the price was initially moving up, so it was bullish, but now it's going backwards. and breaking these forecast lines downwards now. So if the price will be below these forecast lines, we can expect that the market will keep going downwards here. If it's going to be within the Kumo, then it can consolidate, or you have to wait for the Kumo breakout afterwards. But if the price breaks the Kumo already before reaching to this date and gets above here, then you can expect that the price will keep going upwards. So here's another great example where you can take another forecast lines here. So yeah, you will see many examples like this, and this is very simple, but this is a very powerful way to see if this retracement is going to be lasting for a long time or not. So technically, you have to wait for the next 26 days or 26 candles until the price reaches to this line. But if you can wait until then, right, the market will be reaching there sooner or later. So you just wait. Or if you happen to see the market like this in the middle of the retracement, then you can create these forecast lines and just see where the price is at right now. Whether the price is below the forecast lines or in these forecast lines or above. You can just know that, and you can expect the next market move. Or you know exactly how many days or how many candles you have to wait until you can be confident for the next market move. So in this case, yeah, you just wait for the next 5 trading days, right? So this is the last candle, and up to this vertical line there will be 6 bars including today. So including today, you just wait for the next 6 trading days, then the price should be here. The price should be on this vertical line day, and you just come back to the daily chart on this pair and see the location, whether it's up or middle or below these forecast lines, and then you can create your analysis from there too. Okay. Alright, let's see. Let me come back to your comments now. So my face is not freezing today, right? Yeah, yesterday was freezing for some reason, but hopefully today it's working. My voice is okay, and you can hear the BGM okay too. Yeah. Hi, I continue to counted the candles. Why I'm only get 25 candles instead of 26? You have to include today's candlestick as one. So including today, it's going to be 26. But if you exclude today's candle, then it's going to be 25 from tomorrow. That's why. So we must pick the current lowest candle or highest candle. Yes. So yeah, current lowest or the highest of the candle. Yeah. And you draw these lines to Senko span A and B. Alright, good to see you everyone. Good to see you. Is this forecast line same to Gyan fan lines? I'm not really sure about Gyan, so yeah, maybe you can check that. Yeah. I'm not really sure if these are going along with Gyan or not, unfortunately. This is the Ichimoku forecast lines. But I heard that the Ichimoku goes along with Gyan theory a lot. So you might find these are looking similarly. That's a good piece of information. Thanks. Sure, you're welcome. Kumo resistance zone. Yep, that's true. Resistance zone is the original name for the Kumo. If you extend the line more longer, it will be like a support line. Yeah, so it happens to be a support line too. In this case, this is not normal support lines, but yeah, forecast lines can work as a support line too, or the resistance lines. So yeah, if you can extend like this way, then they can work as a support lines too in this case. Okay. Oh, not understanding. So you just take the highest price, or in this case the lowest price, on the daily chart. So come to the daily chart, and whenever you see the retracement, get this lowest price in this case, and take the lowest low, wick pointing downwards, and draw the line to Senko span B and Senko span A at that time, and see whether the price is above or in the middle or below these forecast lines. And you just wait until when the Kumo was forming at that time. I think it was somewhere here. Yeah, we just wait for the Kumo was forming at that time of the low was making. And if the price is resulted below these forecast lines, then we can expect that the market will go down. If the price will be in the middle, then it can create the range. And if the price goes above the Kumo, above these forecast lines, then we can expect that the price will go up from there. Again, this is not 100%, but this can be a great, one of the great ways to foresee the future move. You are a good teacher, sure, thank you. And a good person, thank you for sharing all lines, all of this, sure, you're welcome, you're welcome. So 1 hour is okay. Yeah, 1 hour is okay too. You can take 1 hour to create these forecast lines, but make sure that, just remember, if you take 1 hour forecast lines, there might be fakes. There might be fakes. So even if, let's say this is 1 hour, and let's say the price is below the forecast line, but it can go upwards from there in 1 hour. So just be careful for these fakes. Whenever you take Ichimoku lines, basically in smaller time frames, it doesn't work as much as a daily chart or above. Okay. Oh yeah, there's no membership live afterwards today. Yeah. So this week onwards, the membership live is going to be on Thursdays and Saturdays. So yeah, there will be no membership afterwards today. Do you take trade if the chart is below forecast line? Yeah, sure. I take the trade still, based on my own strategy, based on the way I look at the market by KTS. If I happen to see the Kumo down and Kijun Sen down, then I still take trade. I mean, in this case, this is not technically yet downtrend, but if Kumo happens to be down, Kijun Sen happens to be down also, then I just take sell already before the price reaches on this vertical line day. I mean, yeah, and if the price is above the forecast line, then I still look for the buy chance. Well, I don't look for the buy chance in a daily chart, but I look for the buying chance in, let's say, 1 hour or 4 hour chart, because this is uptrend in the short term. And if I happen to see the market is in between these forecast lines, I mean, let me zoom in. And if I happen to see the market being within the forecast lines, most likely I won't take trades. Yeah, I will wait until the price gets above or below the forecast lines. Yeah. Okay. Maru-san really love these forecast lines. Sure, it's remarkable how well they predict and often act as a support resistance lines. Sure, yeah. They happen to work. They happen to work as a support and resistance lines. Not always, but they happen to have. And yeah, in that case, that will be more. You'll be more confident on these forecast lines. in the future. Yeah, this is a great tool. This is a very powerful tool. Yeah. That is a real eye-opener. Sure. And if you are a member of Ichimoku, then you come to Discord and you come to this education tab, and you will see more videos about the forecast lines. I also talked about them on the membership lives as well. So please, can you share the template of your chart? Oh, this is just Ichimoku. This is just Ichimoku Kinko Hyo, but the platform that I'm using is MT5. So if you're using MT4, the Kumo is not gonna look like this. This is MT5, and this is my setting of Ichimoku Kinko Hyo. To me, Tenkan-sen is blue, and Kijun-sen green, Chikou span yellow, and up Kumo is dim gray, and down Kumo is silver. And I put this thickness of the line of up Kumo, down Kumo, the thickest, so that it fills the Kumo. I mean the zone between Senko span A and B. Never heard of these forecast lines. This is interesting, very useful. Sure. Yeah, you can take it in your analysis too. If market is declining, so by this we can find bottom. If the market starts to go down from here, for example, then what we can expect is that initially the price might reach to the recent low. Okay, so the price might reach to the recent low, and if it breaks it downwards, then it might even go further downwards. So along this forecast line, you can expect the market retracement all the way. So it's always better to look at the other lines, like these support resistance lines and other trend lines might be created. So you might see another trend line. In this case, like I would draw a trend line like this. And if the market keeps going downwards after the forecast line, then I expect the market will be going down below this descending trend line, and eventually I expect the market will break the recent support downwards here. But all this happens and all this starts, this expectation starts when after you see the price below these forecast lines on this yellow vertical day. Yeah, I mean if the price was in the Kumo, will be in the Kumo on this day, then we cannot really expect this scenario. So yeah, but yeah, I just wanted to say that it's always nice to take other lines and other lines, price actions to create the scenario. Okay. They're great to draw as initial counter trend line before price action allows you. Sure. So this is not the price action basically. This is just the lines from the recent low to the future Kumo. So yeah, but one thing, if I add one thing more, is that the until you see that some retracement, you cannot draw the forecast lines. So for example, when you happen to see this pin bar, you cannot draw the forecast line because the price might go downwards afterwards soon. So you have to wait for some kind of retracement, and then you can create these forecast lines. That's something also important to remember. So yeah. Okay. This is very powerful. Sure. Yeah, this is MT5. This is MT5, so you can draw this MT5 also. Yeah. Okay, very good explanation. Good to hear that. Good to hear that. All right. From today onwards, the forecast lines will be known as K's forecast lines. Yeah, just call it Ichimoku forecast lines, okay? Which is introduced by K. I don't want to call this K's forecast line because, yeah, I want to respect Ichimoku. So, yeah, please call this Ichimoku forecast lines introduced by K. That will be better for me. You will notice these forecast lines closely match the trend lines you draw yourself. Sure, yep, that's true. Not always, yep, not always, but often, yep. Alright, big swing AUD, alright, alright. GBPUSD. So GBPUSD, yeah, this is in ranging Kumo flat in daily. So here we are at GBPUSD, but here we see the recent high here, so we can create the forecast lines, and yeah, we can expect the future market move. So you take this high, and including this candle, you count the candles 26 forward. Yeah, 26 forward will be here. So you put the vertical line, and you will know that, oops, not this one. Yeah, you know that the lines, I mean, the price is below these forecast lines now. Okay, the price is below the forecast lines now. So this is bearish now. Until the price breaks these forecast lines upwards, this is still bearish. So after the Kumo breakout, you can expect the continuous downtrend. Yeah. This is very easy, very simple, but very powerful. Okay. You explained this concept very well. Thank you for all the work you do and knowledge you share. I feel I'm getting better with each live. Sure. Thank you, Maru-san. Thank you for your words. Stay gold. All right. Very cool background music. Okay, sure, sure. You like it, the music? It's great. It's great. It's a different background music, so you might feel a little bit different. And I changed the volume of the BGM so that it can create the sense of the beginning and the end of the live. So yeah, by the end of the live today, I will change the volume, and so that you know the live will be ending sometime soon. Okay, I was late about 38 minutes. Sure, sure. You can always replay. Don't worry, everything's uploaded on the archive. So yeah, so here is, today is the Ichimoku day. I mean Tuesday. Every Tuesdays I talk about Ichimoku, Tuesday, Thursdays. So if you have seen this, my program guide, every Tuesday and Thursdays I talk about Ichimoku, like this knowledge. So if you're interested to Ichimoku, then you can join these Ichimoku lives. And on Wednesday, Fridays I talk about my own strategy. So I combine the trend analysis along with the small time frame analysis also. And if you're more interested in this Ichimoku knowledge, you can always join, and I always welcome you to this Ichimoku community, or you can get this Ichimoku Basic Masterbook that I wrote as one of the perks to join. This is 150 pages long, and I write all the basics about Ichimoku 5 lines. And also there is a Ichimoku Discord, and this is monthly subscription. And I do the Ichimoku lives every day also. Every week also. I do the Ichimoku membership lives every week. So if you want to know more, you can click on the link below, and yeah, you can always find more details in there. Okay, so I guess I will be ending the live anytime soon. But yeah, I hope you got the idea of how how you can apply this knowledge. And I will keep talking about this forecast line method in my future lives. So if you can join in my future lives, that'll be great too. Okay, so yeah, I hope you have a great rest of the day, and you have a great trading week this week, and everybody stay healthy and stay gold. Alright, bye for now. またね. Thank you.